Welcome to This Explainer. Today, we're diving into an idea that pretty much turns everything we're taught about retirement and wealth completely upside down. For most of us, financial freedom sounds like this distant, almost mythical dream, right? We're conditioned to believe that actually crossing the finish line of the rat race requires this massive mountain of gold, like literally millions of dollars locked away in a vault before we can ever safely clock out for the last time. But today, we're going to challenge that narrative. We're looking straight at the data and some strategies that suggest your magic number might actually be a whole lot smaller than you think.
So ask yourself, what if you never had to work another day in your life? Seriously, take a second to just imagine that. No alarms, no miserable commutes, just total ownership of your own time. Now, if I asked you to put a price tag on that reality, your brain probably jumps straight to, a multi-million-dollar lottery win. Most people mistakenly believe they need $2, $3, maybe even $5 million to make this happen. But what if the barrier to entry for complete financial independence is actually just a fraction of that?
Okay, let's look at this really provocative claim from prominent investor Kevin O'Leary. He suggests that with just $500,000 saved and invested correctly, you might actually be able to live entirely off the income it generates. I mean, that is a bold statement. $500,000. Yes, it's absolutely a lot of money, but it's not exactly buy your own private island money, is it? So the big question we're exploring today is this actually realistic in today's economy, or, is there more to the story?
Section 1. The Math of Freedom. The Numbers Breakdown.
All right, let's strip away all the emotion and just look directly at the math. $500,000. When you actually break that down into monthly savings goals and factor in compound interest over a working career, this is a surprisingly attainable target for a lot of dedicated savers. But, and this is a huge but, having this cash sitting in a shoebox under your bed is definitely not going to buy your freedom.
The absolutely crucial point here is that this money cannot just sit idle. To pull this strategy off, that $500,000 has to be parked in income-producing assets. We're talking about financial vehicles that generate consistent, reliable cash flow, where you don't even have to touch the principal. This means putting your capital to work in things like dividend-paying stocks, stable bonds, broad index funds, or real estate. Basically, these assets are the engines that take a lump sum of cash and turn it into a continuous stream of income.
So let's run the numbers. If you have your $500,000 invested across those cash-flowing assets, and your portfolio earns a fairly standard 5% annual yield, well, that produces roughly $25,000 a year in passive income. If you can manage to optimize that to a 6% yield, now you're looking at about $30,000 a year. Look closely at those numbers for a second. $25,000 to $30,000 a year. The ultimate question is right there staring at us. Could you actually survive on that? For some folks living in a low-cost area with a paid-off mortgage, absolutely, for sure. But for someone living in, say, downtown Manhattan, not even close.
Section 2. Lifestyle inflation. Surviving the trap.
Because, honestly, the real roadblock to financial freedom isn't your income. It's lifestyle inflation. This is that sneaky phenomenon where your spending just magically increases every single time your paycheck does. You know how it goes. You get a raise, so you lease a nicer car. You get a bonus, and suddenly you've got 6 different streaming subscriptions you completely forgot you're even paying for. Or you start taking these lavish vacations. It's this hidden trap where constant, tiny upgrades quietly eat away at your wealth-building potential.
So the bottom line is this. The more your lifestyle expands, the more money you literally need just to support it. It's like a treadmill that just keeps speeding up. Think about it. Someone who has learned to live comfortably and happily on $30,000 a year is going to hit financial independence vastly quicker than someone who let their baseline lifestyle inflate to $150,000 a year. That second person, they're going to need 5 times the portfolio size just to maintain their everyday status quo.
Let's picture 2 totally different types of earners to really put this in perspective. Over here on the left, we've got the aggressive saver. They make a modest $70,000 a year, but they keep their expenses super low and invest the rest. Now, on the right, we have a high spender making a massive $250,000 a year, but they're burning through almost all of it just to keep up a luxury lifestyle. Who do you think reaches that $500,000 freedom number first? Crazy enough, the person making $70,000 could actually build wealth way faster. It just goes to show you that true wealth isn't flashy cars or giant homes. Wealth is invisible. It's the money you haven't spent. It really looks a whole lot more like quiet discipline than flashy spending.
Section 3. Investment income. The income engine.
So the ultimate goal of all of this is just to make your money work harder than you do through this amazing snowball effect. Step 1. Your assets start earning dividends. Step 2. You collect interest from those bonds or accounts. Step 3, and this is absolutely crucial during your working years, you reinvest all of those gains right back into the engine.
And finally, step 4, slowly but surely, you become less and less dependent on your traditional paycheck. Every single dividend payment moves you just a fraction of an inch closer to independence. It definitely doesn't happen overnight, but over years of consistency, this engine really starts to roar, eventually producing that $25,000 or $30,000 we talked about earlier.
Section 4. The hidden risks, what nobody talks about.
Now, we need to be completely transparent here. Relying entirely on investment income, it is not a magic bullet. When you're living off your assets, you are exposed to a continuous timeline of economic risks. Like, over a period of months, you're going to face market fluctuations. Your portfolio value will swing up and down. Over quarters, interest rate changes can totally mess with your bond yields. Over years, inflation acts like this silent tax, just eating away at the purchasing power of your $30,000. And over decades, well, life just happens. You get a sudden medical bill, or maybe a roof leak that magically costs the exact amount of your annual dividend check. These are real threats that can seriously strain a tightly budgeted $500,000 strategy.
And that is exactly why financial planners stress diversification. You really cannot rely on a single fragile threat. Diversification is your primary defense mechanism against all of that risk. Having multiple sources of income, maybe a mix of real estate, broad market funds, and hey, maybe even a small side hustle or a part-time passion project, ensures that if one income stream falters because of the market, you aren't completely wiped out.
Section 5. The real path forward, building true freedom.
The core takeaway from analyzing all this data isn't just a strict yes or no on whether $500,000 is enough. It's the realization that financial freedom is far more about behavior than income. Escaping the rat race isn't about endlessly chasing higher and higher salaries just so you can buy more expensive stuff. It really comes down to the discipline of spending less, the consistency of investing regularly, and just stepping back to let time do the heavy lifting for you. It's about figuring out how much freedom your money can buy rather than just how much stuff it can buy.
So, I want to end this explainer by throwing the spotlight right back onto you. Based on your current expenses, the city you live in, your daily habits, would $500,000 actually be enough for you to stop working? Take a really hard look at your budget today, think about the life you truly want to live, and let us know your thoughts down in the comments. Thanks so much for joining me on this deep dive, and keep building that freedom.